What's up, sons? It's Blind Rod with Son of a Tech once again, and today we have an announcement from the Radiant team that the entity has revealed itself. Unfortunately, we do not have that revelation for us in particular, but we have some news surrounding it. We also have announcements from other cryptocurrency networks that are changing the way they're approaching the entity. So we're going to be talking about all of this right now. Welcome back, everyone. So this announcement was on the Radiant Discord at 3 o'clock today. It says, "At everyone, dear Radiant community, we have an exciting update that marks a significant milestone in our journey. The moment we've all been waiting for has arrived. The mysterious entity that has been contributing to our network security has officially revealed their identity to us. After much anticipation, we are thrilled to share that a company in the crypto mining industry has confirmed their involvement in securing the Radiant network. They have played a crucial role in elevating our hash rate and ensuring the robustness of our blockchain." Now, this has been going on for the better part of 2024 and has been a pretty massive problem. And we do know that there was communication in the past between the Radiant team, the Viper.net team, as well as the entity, but there was no official announcement of knowing who they were or when they were going to launch the ASICS. I have reached out to both the Art of Satoshi as well as Matt from Viper. Neither one are willing to basically reveal who the entity at this time is because, well, there's probably some sort of financial incentive to keep that a secret until they launch their ASICs next week, because it goes on to continue and say, in an exciting development, the manufacturer has also confirmed that they will begin selling their Radiant ASICs on their official website in approximately 1 week. This is a monumental step forward for our ecosystem, as these ASICs will further decentralize and strengthen the network, opening new opportunities for miners and investors alike. It says to stay tuned for more updates and get ready to be a part of Radiant's new history, or the history of Radiant. You can be a part of it, I guess, by purchasing one of these. Now, I'd be very, very careful surrounding purchasing one of these, because remember, this entity has been basically mining Radiant for quite some time now, which means they have a bunch of volume. And if you look at the volume depth on any of the exchanges, including ZEGX, you'll notice that just a couple $1,000 buy has huge 20 to 30% swings in the price of Radiant itself. I would presume that we start to see a pump in the price of Radiant, which has actually already reared its head today. And this is because it is so cheap to pump the price of Radiant right now as we speak. And on the flip side there, it's very quick to dump that price as well, because once again, we're talking about the depth being very, very small. I mean, even on MEXC, we're talking about, a couple $1,000 depth. It's not too hard to pump this cryptocurrency necessarily, especially on these smaller exchanges. So just keep an eye on that. As you can see, the price has gone back over 1/10 of a penny, and that is actually coming right in line with the project that we're going to be talking about next, which is Carlson, which has actually been going down in price. Now, keep in mind the total supply of Carlson right now is 1/10 of that of what the total supply of Radiant is. So obviously, there's a lot more money behind trying to pump up that total supply of Radiant over trying to pump up the total supply of Carlson, if you're comparing prices or anything along those lines. Carlson Network has decided to go the opposite direction, and they made a post on Twitter earlier today referencing both my video as well as Mind Something's video, and saying in early 2024, the cryptocurrency mining landscape was disrupted by the emergence of a mysterious and powerful mining actor, commonly referred to as the entity. This entity has demonstrated the ability to rapidly adapt its operations across various proof of work networks, deploying massive hash rate power or massive hash rates to dominate multiple small cap cryptocurrencies, including Radiant, Lithium, Kylecoin, and various kaspa forks, such as the Carlson Network. Goes on to say the dominance of the entity has raised significant concerns about centralization within these networks. By controlling a disproportionate amount of the hashing power, the entity has the potential to undermine the decentralized nature of blockchain networks, destabilize the value of coins through large-scale sell-offs, and reduce the profitability of smaller independent miners. Well, in the case of Radiant, it completely took away the potential to even mine Radiant, as it was 100% of the network. So that's a very valid point as far as that is concerned. Now, obviously, with the ASICS coming out to the public, that should shift a little bit, or you would presume that it would shift at least a little bit. But then you got to worry about point number one that Carlson Network makes here, which is a valid point, is that you could see a destabilization of the value of the coins through large-scale sell-offs from the entity after they've unloaded their ASICs. And this is a problem that obviously I've talked about a lot in the past as being a concern based on who controls the most volume and whether or not they're going to hold and how long they're going to hold, etc. In the short term, obviously, I wouldn't expect any sort of sell-off from the entity on Radiant due to this announcement. I would presume that they will probably double down on investing into the project more, especially because it is so easy to swing the price up on this particular network. It could get a lot of eyes on it from the likes of, the kaspa fanboys looking for another pump, that sort of thing. And you will see that influence, that early influence of ASICS coming onto the network, of basically causing a bunch of FOMO surrounding it, causing the price of Radiant to go up in price. And then subsequently, after all the machines are liquidated and sold off, if there are not follow-ups from larger companies and other competitors within the ASIC market, you could see a big turn and burn. Not unlike what we see with the FPGA mining strategies in the past. So just keep all of that in mind when we're talking about Radiant in particular. They go on to cite my video as far as Carlson Hash said, and they are moving to basically Carlson Hash v2 based on basically the LOL miner developer who did the fish hash algorithm. So basically you can expect this to be a fish hash plus algorithm, and that is the foundation for the Carlson Hash v2. This is going a little bit of a different path than we saw with BlockX earlier this week, who went the route of going with Autolycos v2 and a modified version of that for their particular algorithm, which comes from Ergo originally. We're seeing basically a lot of integration with LOL miner across different hashing algorithms, and has proven to be, at least on fish hash, both successful and also ASIC resistant so far. So probably not a bad idea going that route. Now, longevity wise, I would say ASICs have stayed off of the network for Ergo a majority of the time, but we are aware of course, FPGAs on Ergo with Autolycos v2. So, fish hash at this point, no ASICs or FPGAs, probably an advantage there as far as I'm concerned. I think that you're probably in a better spot coming out with a completely new version of a hashing algorithm to prevent this. And that does mean that Carlson is focused on GPUs to maintain the security of their network. But, as a result of this, there is no price pump. Well, why would that be? I mean, this is a really interesting point to talk about, and that's that basically when you run something like the entity or an ASIC manufacturing company, you have a lot of liquidity and capital, well, just basically capital expenditure options to help basically promote the sale of your merchandise. And in their case, their merchandise is not only Radiant, but also the shovels to mine Radiant. And therefore, they will spend some CapEx on pumping the price of the coin. At least that's what you would expect. Do I know that they are doing that for sure? No, I just know that that is kind of the way it's worked in the past with Bitmain and other small cap layer 1 proof of work projects. I would expect Carlson to not have an initial price increase because there are not GPU manufacturers trying to manipulate the price to up the cost of their graphics cards, unlike ASICS. And, Carlson's going to have to deploy and gain trust. And that is just something that's going to have to do. They're going to have to do. It's a more grassroots approach. And, even if we took a look at something like BlockX has, with its recent launch, it also did not get a price pump from its switch to ASIC resistance. There was a little bit of a one on the second, and then that all came back down. So, when we look at these, as compared to what gets ASICS, if we're being completely transparent here, if we look at most recently Lithium over the past, let's say month, because technically they released that, it actually has come back down. But, this is the wrong one. Okay, let's get that correct there. Boom. I was going to say, I thought it was closer to $2. Yeah, I mean, obviously, Lithium over the past week did have its pump up from the ASIC announcements and has come back to settle back down. They had a much larger pump up over the past month, I believe, with the various launches of different ASICs across the board. And then obviously, most famously, we have kaspa with a ton of ASIC support. If we really have to zoom out like a year here, where it really drove that price up from the 5 cents up solidly over the 10-cent mark, over the 15-cent mark, with the announcement of its ASICs. Now, the amount of ASICs going onto the network now for kaspa is getting into that long-term mining solution, closer to what we saw with Bitcoin. I think we won't see as many meteoric rises from this, just because there already is large mining facilities that have invested in mining kaspa, including Marathon Digital, who can really drive that price down and really, really get efficient as possible. And that is really what the end game of ASICs are. You're playing with pennies and basically fractions of a penny at the end of the day to outperform your competitors. And that's the ASIC game as it sits. So it'll be interesting to see what the long-term ramifications on kaspa, Lithium, and Radiant are going to be. But like I said, in the short term, I would presume that we would see some sort of large purchases of Radiant that will drive the price up, especially since the price swings are so easily realized. We might see some huge ups and downs as people that were investing lower try to sell out and get out of Radiant. There are those people that will happen too, like the big spike and drop that we saw earlier this week on Radiant. That's possible as well. But I think overall, you'll see a steady short-term increase of price on Radiant, which I've been expecting, like I've said, for quite some time now. So let me know what you guys think. I'm not so sure this is the direction I am excited to see cryptocurrency go. Obviously, we have our cyberpunk options with like Carlson Hash, with CPU and GPU mineable coins. Some people are making those decisions, and I think that's going to play out well for a well-distributed asset, right? At the end of the day, I think you'll have, smaller amounts in the large wallets than you would necessarily see. I think you will, over the long term, see wider adoption for GPU mineable coins and lower adoption for ASIC mineable coins, as the competition just makes it impossible for you to get into unless you're just purchasing and holding. Let me know what you guys think about all of this down in the comment section below, and I will see you next Tuesday.